As some individuals, we all have goals, we all have objectives, and we equally have targets we want to achieve. That's why I want to talk about how to build wealth with a goal-based uh, investing strategy, goal-based investing. And this is a step-by-step guide on how to be able to use your goals to determine the kind of strategy you are going to use to build wealth. And goal-based investing is a strategy where investment are tailored to specific financial goals, such as buying a home, funding retirement, or saving for children's education. And so goal-based investing involves aligning your investment strategy with your personal financial objectives. So instead of solely focusing on maximizing returns, as the case may be, you allocate assets based on your goals requirements, which could be, for a short term, a medium term, or a long term needs. So in this video, I want to talk about how goal based investing works. How does it work? How does this strategy works? Number one is you define your goals. Define your goals. You clearly identify the financial goals you want to achieve. Example, retirement, purchasing a home, or funding your children education. Number two is you set a time horizon. After determining the goals you want to achieve, you ask yourself, what is my time horizon? How long will it take me to be able to secure, to be able to obtain, to achieve these goals I've set for myself? And so you determine when you want to achieve each goal. Example, 5 years for a vacation home. It might be 30 years for retirement, depending on your goals. The time frame will vary depending on the goals you want to achieve. Number three is you assess, your risk tolerance, because investment is done in an atmosphere of risk. So it's necessary you assess your risk tolerance, critically. Decide how much risk you are willing to take for each goal, considering the time available and the financial needs. So what risk are you willing to take? Are you comfortable with, depending on your natural risk appetite that may be influenced by your age? Number four is create an investment plan. You go along and then create an investment plan. You allocate your investment across different asset classes, such as stocks, bonds, cash, real estate, commodities, alternatives, as the case may be. Number five is monitor and adjust. You need to regularly monitor the progress of your investments and make necessary adjustments to your portfolios so as to be able to stay within the confines of the goals you want to achieve. Or maybe you want to equally, rebalance or adjust based on your financial circumstances. But it's necessary you make this adjustment so as not to go outside a route that will take you to your ultimate goal. We want to look at the benefit of goal-based investing. The benefits of goal-based investing. Number one is clarity and focus. It helps investors stay focused on their long-term financial objectives rather than short-term market fluctuation. Once you have a target, your eyes are fixed, on those targets, and so you don't get distracted by short-term market noise or by short-term trends or occurrences in the overall market. Number three is a personalized strategy. So you tell us your investment, you tell your investment to your financial goals, whether it is a down payment for a house or it might be retirement savings. And so you are guided by your personal goals, personal objectives. Number three is emotional control. By focusing on the goals, investors can avoid reacting impulsively to market volatility. So you don't just react because the market is ever volatile. So for the fact that you have the goals you are targeting, you don't just get you will not be easily distracted. You will not get distracted. Number four is better resource allocation. It will help you to actually allocate your resources and channel your funds efficiently, making sure that assets are invested in a way that best support each time frame and your risk profiles. We want to look at the risk of goal-based investing. We've considered the advantages, which is a clarity of focus, personalized strategy, emotional control, as well as better resource allocation. Is time we look at the risk, the drawbacks, and the disadvantages of goal-based investing. And number one is market volatility. Short-term goals may be affected by market volatility, requiring adjustment in strategy or risk tolerance. If you want to achieve your goal within a short time, on a short-term basis, the market seems to, fluctuate at an increased rate. But if it's a long-term investment, it is smoothing out the returns, kind of. Number two is over concentration. So focusing too much on a single goal can lead to over concentration in certain asset certain asset classes. If you are so much focused on a particular goal, that might necessitate you focusing on a single or few asset classes. And of course, we all know that over concentration is risky on its own. Diversification is a bit better, is tolerable and palatable. Number three is underestimating cost. Failing to fully account for cost or inflation may result in an insufficient fund to reach the goal. So when it comes to investing, there's always the cost segment, the cost aspect of it. You have fees are there, commissions are there, and these fees and commissions will even eat into your overall investment returns. And so you discover that you want to hit a particular goal, a particular target, then there are costs associated with those expectations. So in conclusion, goal-based investing is a powerful way to ensure that your financial decisions align with your personal aspiration, and not only that, by focusing on specific objectives, adjusting your strategy, as you progress and regularly monitoring your plan, you can build wealth and achieve your financial goal. So generally, if you want to invest, first of all, let it be a kind of top-down approach. Ask yourself, what do I want to achieve? So once your goals have been clearly spelled out, you now pick strategies that will help you to be able to achieve those goals. So that's the essence of goal-based investing.